So the Chinese government actually just made a major announcement that caused NIO stock to crash. NIO stock actually dropped below the $5 mark, which is something that most investors never thought they would see anytime soon. And really, these core fundamental changes that just happened in this industry is something that you need to understand as a NIO investor or a potential NIO investor. So that's exactly what we're going to be discussing today, guys, so let's get into it. So the Chinese government actually just announced that they will be cutting subsidies for electric vehicles to boost high quality development. And if you weren't aware, really, the Chinese government has incentives for its consumers, just like most countries do, where if you purchase an electric vehicle, they're actually going to give you back a rebate compared to purchasing a gas or ICE vehicle. So previously, any vehicle that provided at least 400 kilometers of range was eligible for around a 50,000 won rebate, which equates to around $7,500 US. Now, I don't know about you, but that is a substantial discount, and it actually helped drive manufacturers like NIO to such success in the last year because a lot of people want to take advantage of this because there were some major changes down the pipeline, and now we have a better idea of what those changes are. So the ES8, which is an SUV that NIO makes, actually currently retails starting from around 448,000 RMB, which equates to around $66,709.35 US. And this is of course for the 7-seater version, which is currently the only model that NIO sells. You can also see that they have a 6-seater listed here, but it isn't in production yet, and it actually will cost a bit more to consumers. Now, NIO also announced pre-orders for their brand new ES6, which will begin delivery in late 2019, but this will be an even cheaper version of their already successful SUV, and it'll be priced around $53,000 US for the base model. Now, the ES6 actually meets the 400 kilometer threshold that the government has set, and in fact it actually gives consumers around 500 kilometers here on a single charge, which is pretty impressive in my opinion. And you also have some pretty incredible stats with the SUV here, with a ton of horsepower as well. So this SUV is no slouch and will be a pretty fun car once it is released. And if you're one of those viewers sitting out there watching this video thinking, well, why would anyone buy a NIO when the Model X is available from Tesla? Well, check out the pricing here. So as you can see, Tesla currently lowered their prices on their cars in China, but even with that, the cost of the Model X is much more than the NIO ES6 and ES8. The cheapest Model X comes in at just under $116,000 US, which used to be $142,000 US. And this means that it is about $49,000 more expensive than the ES models. Majority of Chinese consumers will not be able to afford a vehicle like the Tesla Model X. And let's be real here, most Americans will not be able to afford that either. So this is exactly why in my video yesterday I covered why I bought NIO stock. And if you haven't checked out that video, make sure you check that out. I will leave a link up here as well. But essentially, in a nutshell, NIO has the first mover advantage, and they have the cheapest electric SUV that's available right now for consumers. Okay, so anyways, let's get into why the stock actually crashed. So the thing that's scaring investors right now in NIO specifically is the subsidy cut from the government. Everyone has been extremely bullish on the Chinese government supporting electric vehicles, which in some ways they still do, but they just announced that they will be cutting this subsidy that they give, this rebate that they give, in half. And the reason that they provide is as follows. China will reduce subsidies for new energy cars as the industry starts to enjoy economies of scale and declining costs. And cutting the EV credit is a move to support high quality development of a new energy automobile industry and boost innovations in the sector. So according to a joint statement released by the government agencies, they said that the subsidy for pure battery electric cars with a driving range of 400 kilometers or above will be cut by 50% to 25,000 won per vehicle from a previous 50,000 won per vehicle. So this is actually a huge blow to the EV market in China, and specifically hurts companies like NIO. Because guess what? With this incentive cut, it's less likely that people are going to go out there and purchase an electric car, let alone an electric vehicle from NIO, because your traditional gas cars are typically much cheaper. So think about it. Before this cut was actually announced, the cheapest electric SUV that you could get was the NIO ES8, which came in at 67,000. And after the 7,500 rebates, your total cost on this would actually be around 59,000. And this is of course for a brand new ES8 from NIO. But now with this cut, the price actually goes up to around $63,000, which is about a 6% increase from the previous price. So logically, to offset this, consumers would have to actually have around a 6% increase in their income after taxes to actually be able to technically afford this at the same rate as they were before. Now, we all know that the Chinese economy is supposedly struggling. It is not really struggling, it's just been declining slightly year over year. And because of this, likeliness of getting a raise for the average person, especially a 6% raise after taxes, is much less, which is why I think this actually could hurt NIO and other EV companies in the near future at least. And really, on the other side of the fence, you may think that this is not really a big deal. It's only difference around $3,750, which is not necessarily a make or break amount for someone who seriously wants to consider an electric SUV from NIO. But we have to be realistic here, and with this increase, there is definitely going to be a segment of the market that just finds this a bit too expensive now because it's above that $60,000 level. And because of that, NIO is going to be under more pressure now to lower their price point back to under $60,000 after the incentives. So they may be considering taking a bigger loss on their vehicles. And of course, you know what happens if they take a bigger loss? They're going to burn through a lot more cash, and this will not be good news for the company or for shareholders like myself. And guess what? To add to the fire here, you know how I said that Tesla actually reduced prices on their cars? Well, it's actually interesting because they actually reduced prices on the Model 3 as well. Now you can see the cheapest Model 3 actually comes in cheaper than the ES8 from NIO. This Model 3 will come in at around $61,000, and this is without any subsidies from the government for EV. And of course, the $61,000 price point is cheaper than the $63,000 price point from the ES8. And yes, I do understand the argument that SUVs are typically more in demand, at least in North America, and SUVs are typically more expensive than cars. But let's be real for a second here, and let's look at one thing that we haven't really considered, and that is brand and brand loyalty. Tesla has an incredibly strong brand worldwide. China, for example, loves Teslas. China, for example, loves Apple iPhones. And if we can learn anything from the iPhone demand in China just for the brand itself, we can see how much potential Tesla has here, even if it is with their Model 3. So really, if the difference comes between choosing a car or an SUV between a brand like Tesla or a brand like NIO, chances are a lot of consumers may actually go towards a car because it has a Tesla brand behind it. This is very similar, like I said, to the iPhone and Android comparison. Android typically has more features when you look at the feature comparison side by side, but the iPhone does win a lot of consumers over because of the brand behind it. So don't underestimate the power of a brand, and it's actually a major reason why I love investing in companies that have a strong brand name behind them. So now you kind of understand really why the share price of NIO dropped to $5 per share, actually even slightly below $5 per share. And really at this point, you may be thinking that this movement in the market is a huge overreaction. Like we said, Tesla is in a good position now with their Model 3s, so maybe it's a good time to look at Tesla stock, in fact. And yes, I do think that they will benefit from the recent changes, which will hurt NIO. But that still doesn't change the story where NIO is still the cheapest electric SUV that's available in China. And like we talked about in the deep dive video in NIO, they have the first mover advantage, so they do have kind of a head start when it comes to the cheap budget electric SUVs in China. And this is before Tesla releases their Model Y in a couple of years, so NIO really needs to take advantage of this and try to sell as many of these SUVs as possible before Tesla becomes an even bigger threat. I think over the long term, the Model Y from Tesla will dominate even the Chinese market, but I do think that NIO does stand a chance here if they execute properly in the next couple of years. So now that the price of NIO has dropped around $5 per share, maybe even lower than that after recording this video, has your investment thesis here on NIO changed? Are you more bullish on the stock, more bearish on the stock? Are you planning to buy some shares? Are you planning to sell some shares because of this government cut? Do you think that this whole move was an absolute overreaction, or was it justified? Answer all these questions in the comment section down below. I really love hearing from you guys. But either way, guys, don't forget to invest positively. All the best on a NIO investment if you do invest in NIO, and I'll see you in the next one. Peace.